Welcome to the Intelligent Investing Podcast, where modern portfolio theory can suck it. A student of the School of Graham and Doddsville and a clergy member of the Church of Warren Buffett. Here's your host, Eric Schleien.
Hi, this is Eric Schleien. You're listening to the Intelligent Investing Podcast. Today we have on Igor Ciric, who is from Sweden. And welcome to the show, Igor.
Thank you.
Now, you have a background in engineering, and you're an individual investor, and you essentially apply some of the wisdom and knowledge that you have learned from engineering, and you apply it to investing in mostly technology stocks. Is that correct?
Correct. Yeah, I try to focus on the patterns and try to find out if the technology has any potential or if it's just empty words.
Okay, interesting. How are you able to distinguish? We're going to just jump right in here, but how do you distinguish the difference between, a really polished management team and they're talking about some very interesting technology, but they're bullshitting? I mean, how can you distinguish that just from being an outside investor without actually talking to management or actually, going and seeing behind the curtain, if you will?
Yeah, that's a very good point, because most investors are actually valuing it very highly that they can contact the management and that, they try to evaluate their management. I'm not focused that much on it. Mm-hmm. Basically, I'm just using my general knowledge that I have in electrical engineering, in technology, and first of all, I try to understand it, and then I go more deeper into it to really, really understand the patterns. And from there, I try to make it as possible to things sound rational and so on and so on. So basically, if you have some backgrounds, it's quite easy to understand if this is something very, very easy or if it's something like general, like machine learning, AI type of thing that probably it's very, very that has very low odds of succeeding. So
interesting. Can you give an example of a company that you have looked at where it sounded really good to maybe the average person, sounds really good on paper, but when you looked into it, you're like, okay, this is probably not that viable? Is there anything like that? Or?
There is. I do not have the name right now.
Okay.
But they were they were collecting data, for example, for health issues. And
okay.
What they're doing is they say, they have contractors with many different insurances, which looks very, very good. So if you would be an individual investor and you would look at it, you would say, oh, this is a moat or something, because they have already this cleared path where they can just, they just need to get out there and they can just distribute their product or whatever. And it sounds very well that they're targeting, first of all, they were targeting customers that usually don't do these checkups and don't usually visit any doctor, and they're using some medical data of these people and so on and so on. And the solution, when everything sounds good, until you ask them, okay, how are you gonna solve?
Right.
How are you gonna use this data? And for example, they say, we're gonna use AI. And if you have some basic knowledge in machine learning, what you understand is that using AI for medical concerns actually means that you need to combine different characteristics. So let's say smoker versus non-smoker together with age, together with many different characteristics. So in the end, it's actually you use some algorithms called deep algorithms, and it's quite expensive to exercise these kind of algorithms. So it's you immediately see that, okay, this is a bigger problem that they are actually trying to like say that it's something that can be easily solved or something. So when you actually look at the technology behind the solution, you easily see that that's not possible. But all the other part of the story sounds very, very good and very, very reasonable.
All right. And then is there anything that you...
So that's one example.
Yeah, no, it's interesting. Is there anything that you have, you're currently looking at or currently investing in, where you think the product is very viable? You think the stock is reasonably valued as well? Is there any names that you're looking at right now that you think are interesting?
I am looking at a very interesting name that I've been in contact, that I actually wanted to talk about first.
Okay.
But for some reasons, I that name right now.
Hold on. Say that you said for some reason, and then it kind of cut off. Say that again.
Yeah, like I have, like, as I said, I'm part of the microcap club, and right now it's actually a new, it's a new, it's new to the whole community, and I want to give a chance for the other investors to get into it, and I'm in contact with other investors to try to get them on to understand these technologies. I think it would be not so fair to talk about it today.
Sure. So let's not talk about it on this. What's one that you can talk about?
Yeah. So the one I chose to talk about is called Check-Cap.
Check-Cap?
Check-Cap. Yeah.
How do you spell that?
CHECK.
Okay.
CAP.
So Check-Cap. Okay.
Cap.
Got it.
Yeah.
And tell me about this company.
Capsule. Yeah, so basically this company, it started selling for $70 a share back in 2015. Today, it's an stock selling for around $1.6 a share, and has a market cap a bit over 30 million.
A little over 30 million?
13 million.
13.
Yeah.
Okay, so not too big.
Not too big, yeah.
Okay.
It's an liquid, yeah.
All right. Okay.
So it's quite fun, because if you look what this company is doing, is that they are having.
By the way, hold on, guys. Just for anyone listening who this might be the first time listening to the show, I don't know how. I think most of our listeners are pretty sophisticated, but for someone who isn't, don't just listen to this name and not do your own research and then put a market order in. You'll really screw yourself. So do your own due diligence, put a limit order in. This is a $13 million illiquid company that I don't personally have any skin in the game either way. So not a buy or sell recommendation. I just wanted to put that warning out there for maybe some new young listeners listening for the first time. But go ahead.
Of course. And everything I say here should
Yeah, nothing you say shall be deemed as investment advice either.
Yeah. Of course, as always.
Yes.
Yeah. So basically, what they have is they made an ingestible capsule that's using X-ray, so to check for colon cancer.
Okay.
So basically, they are trying to compete. Is done today.
Say that again. Last thing we heard was trying to compete, and then it broke up.
Trying to compete with the conventional colonoscopies doing in the hospitals right now. So if you know how a colonoscopy is done, you first of all you need to do something called bowel cleansing.
Guys, this is the first time we're going to talk about the details of a colonoscopy on the Intelligent Investing Podcast. This show goes in all kinds of weird places. Let's keep going. Yeah, so tell us about colonoscopies. Oh no, it broke up.
The podcast is going on.
Hold on. We got
direction.
disconnected. We got disconnected. So the last thing I said is tell us about colonoscopies, and then it got disconnected. So go ahead.
Okay,
what were you saying?
Yeah. So what you need to? Sorry, I.
Hello. It broke up again.
Yeah, I'm losing you again.
That's
Maybe
okay.
I should try to switch Wi-Fi.
Do you want to? Is your Wi-Fi right now kind of weak?
Do you hear me?
Yeah, I can hear you fine.
Okay. Yeah, I guess it should be better now.
Okay, so anyway, last thing you were saying, I was saying, tell us about their process in colonoscopies, and then I get disconnected.
Do you want me to go through the whole process?
Dude, that is up to you, man. Whatever you think helps the investment thesis.
Okay. Yeah.
Do my listeners want to go through the whole process? Probably not.
I will leave that. I will leave that to the individual investor to go and check up how a colonoscopy is done.
Right. Do a Google image search for it. See what comes up.
Yeah. So we spare us some time.
Yeah.
But the thing is that you need to do something called bowel cleansing prior to the checkup. So actually, what you can't be eating for a certain amount of hours. I'm not sure how many, but you need to go through this process. And the thing is that when you ask people why they are not doing regular checkups for colon cancer, the main reasons is, of course, the procedure isn't that nice, but also they point out this bowel cleansing procedure that's kind of demanding for you to start fasting for a period of time just in order to get a checkup.
Right, and it's also an age thing. I mean, typically people who are of our age aren't getting colonoscopies.
Yeah,
right?
Of course.
Yeah,
that's another thing. So basically,
one day you will be.
One day, but the thing is that now, in order to raise the low screening rate, what you actually can do is provide a solution that doesn't include bowel cleansing, that has a procedure that's pleasant,
or maybe just not unpleasant. How about that?
Yeah,
I don't think anyone has it's pleasant.
Yeah. I'm still trying not to get into the whole procedure.
Right.
Yeah. So so they have a capsule that's using low X-ray radiation. So actually, it's much lower than if you would do the regular X-ray screening test. When these beams are thrown at you, so it's not dangerous.
Yep.
And a support for this claim is that the product right now is CE marked and it's approved by the FDA. So there's no FDA approval you need to play on as a investor. It's already approved. That's a very big thing, I think.
Yeah.
And it's also approved for commercial sales by Israeli Ministry of Health.
Okay.
So that's very interesting. So let us talk about some other solutions that exist today. So you have another solution is something called stool screening, and it's mainly a company called Cologuard standing behind this product. So what you're doing is this product checks for blood cells, or what you call checks for blood in your stool. So that's an easier way to actually do the checkup. The problem with that solution is that you actually you cannot check for polyps. So when the cancer first starts presenting itself, it starts by a small polyp, and then when it actually grows to like cancer tissue, that's when you actually can recognize these blood cells or this blood in the stool. Okay. So you can check when you actually already got it, but you can't check when it's starting to grow, and that's an important part of like that's a major part of this Check-Cap solution that you actually can see before it actually happens.
Right.
Another solution is PillCam, and it's the same kind of procedure when you swallow a capsule, but instead of X-ray, you're using a camera.
Okay.
And that already exists and is used commercially. So, yeah, if you start talking about this, company called Cologuard, it was actually the technology behind these stool tests was acquired by a company called Exact Sciences, and actually in one of their 10Ks they actually mentioned Check-Cap and says that Check-Cap is one of the primary competitors, and that there is a threat from this company. So it's very interesting seeing another company actually mentioning this solution.
Yeah.
Yeah. So if we look at this PillCam solution, the solution with the camera, there's another company like the big company we all know called Medtronic.
Mm-hmm.
Like has this solution right now, like is selling this product, and it was acquired by a company named Coviden. And what is quite interesting is that when I started reading about this, I realized that actually PillCam has cleared a path for Check-Cap, because in order to have like technology swallowed by a human being, mm-hmm. I mean, there's a lot of tests and there's a lot of acceptance required for that. So I guess it will be much easier for Check-Cap to like clear the path if you already have a product that is like doing the same procedure, but just instead of a camera, you are actually using X-ray, which makes the product much better.
Right.
Yeah. So if you look at the price ranges right now, C-Scan estimates right now, it's an estimation, so we can't be sure, but they estimate that the price for a C-Scan checkup will be around $600. PillCam right now costs around $500. And in US, colonoscopy, I've found there's a big differences, like where you live and which hospital you go to. But around $1,000, I think, is the normal range for a colonoscopy checkup. So actually, the whole. Do you hear me?
Yeah, I hear you perfectly.
Okay. Yeah. So the whole Check-Cap, I mean, there have been studies done on Check-Cap on the C-Scan. I forgot to mention it, that the solution is called C-Scan, like the scanning procedure. That's when they're using algorithms to try to estimate if this is cancer or not. The procedure is called C-Scan, but Check-Cap is the product. So this, like for the C-Scan system, it has been through a couple of studies. I recommend every investor go and check them up. And what you see is that right now an FIT, like the solution for the stool checkup, has a ability to find cancer, like the chances are around 96%.
Okay.
And C-Scan right now have 82. So it's not like they're not far from it. My understanding is that it won't be that much of a complication. There you have to adjust the algorithms, maybe worst case increase the X-ray beams, but I do not see any problems why they wouldn't achieve even like this 96%.
Right.
But what's even more interesting is that if you look at polyps, if you look at the precancerous polyps, C-scan actually achieves to find them in 76% of the cases, while FIT only achieves to find them in 29% of the cases. So actually, Check-Cap or C-scan today is already better than any other solution to find precancerous polyps. So even if we don't achieve, even if we stay at 82%, we still have a better chance to find these precancerous polyps. So that's a very interesting part, and these studies can be checked up, on the net. I recommend everybody to go and look at them. I think Mayo Clinic have been. I'm not sure. I think Mayo Clinic have been involved in this as well.
Okay.
It's very interesting, and the probabilities are like the confidence intervals are quite good. So it's not like they are unsure of these ranges. It's quite good.
Right.
It seems like a good estimation. So another thing to mention is that colonoscopies actually aren't 100% sure, because you have the human factor, and there is some cases where you do not find it. The percentage can vary, but there is a few percentage, like maybe there's different. I've tried to find that out, but worst case scenario, some source claim 9%, which I think is very high. But I think at least 1 or 2% you have the human factor, where like if the cancer is on a complicated place, there is a chance you miss it. So it's important to know that colonoscopies actually aren't 100% safe.
Right. Now, back to the company. In terms of valuation, how are you looking at that?
Yeah. So the way I'm looking is that if you look at the colon cancer screening market, first of all, I mean, it's very, very risky to look at the total addressable market and do evaluation. But if you start there, like
sure.
This is a multi-billion market, or at least $1 billion, and if you if we start looking at the balance sheet and how the company is doing right now, the company doesn't have any sales right now, so they're not commercial. The market cap is 15 million. I think they have cash around 11 million.
Okay.
But there is a big cash burn. I think they are burning around 10 million a year. So they are in need. They are in need of funding. So it's an important aspect to know that the risk for dilution is quite big. Anyways, if we look at the valuation, if you try to evaluate it for some kind of if they would be acquired by Medtronic, for example. Medtronic has Medtronic right now has the solution, has the PillCam solution. How do I explain? Medtronic owns the PillCam product.
Right.
I think the interest for Medtronic would be quite high to just acquire this solution, just put it into their
into their portfolio product.
To the portfolio, right.
Let me ask you, when you're looking at these smaller companies with an interesting technology, is the thesis that, you know, essentially the technology is viable and therefore they'll probably get bought out at a premium? Is that the thinking? Because I guess what I wonder, right, is what if there's lots of dilution and then they get bought out at, you know, a significant discount right now to what the current market price is. Let's say they have, you know, there's 2 more years until they get bought out, lots of dilution, more cash burn. So by the time they get bought out, it's not even worth what the current market cap is now. I mean, how do you look at that risk?
Yeah,
this is so outside my forte. I'm genuinely curious.
Yeah, that's a very good question. Like, I've looked at Given Imaging, and like, if you look at their history, they had a big period of losses, and they had no revenue for 6 months in 2001, and in 2002 the company grew revenues to 29 million. So this is the company that originally owned the pill cam.
Okay.
So they achieved a revenue of 29 million by themselves. And then in 2014, Covidien stepped in and acquired Given Imaging for 860 million net of cash. Right. So, and that was around 5 times the estimated annual sales that Covidien expected to gain from this acquisition.
So essentially, if you're finding these viable technological solutions and you own sort of a basket of these securities, you could potentially do pretty well. Where maybe like 1 or 2 go to zero or get diluted heavily, but then, you know, it only takes 1 or 2 of these to really hit it big for you to make a lot of money. Is that kind of the deal with this kind of investing?
True. I think I
don't know. I'm asking.
Yeah. Okay. I think the risk reward is so good that even if this company fails and gets acquired for a small, you know, for a small valuation, still like on average you should do very, very well. Like, as we will see, like I will show some numbers here. Like, if like let's say Check-Cap would be acquired for the exact same amount. They have a better product, but let's say like Check-Cap is bought off for 860 million net of cash as well. What happens is that you have $100 share.
All right, sure. What percentage of your portfolio do you typically make bets like this? So I mean, this is not something you'd make like a 10% position. Am I right?
Well,
maybe I'm not right.
I'm quite young, as you see. So the way I'm thinking is like I have a bigger potential to risk. Sure. So for me, I do not recommend other people to enter this with a 10% position, but I would not have a problem even having a 20% position in this company. Okay. I think, because I mean, you also need to understand, or you need to know how I'm going with investing. I'm having very few positions, but what I think is very, very good positions. Right. So I do not do this 50 companies portfolio thing. Right. But also I'm very young. But for like an average investor, maybe it isn't rational to take more bigger than a 5% position in this company. So that's correct.
Interesting.
And also, it's all about how sure you are. So, when
do you think the company would start? Let's say they don't get bought out for a few years. Is there any indication when they would actually start making money?
That's a very good question. I've found,
because the cash burn risk seems to be a big risk here.
Yeah, there is. The cash burn is a big risk, but at the same time, like if we look at the potential, it's very, very big.
Right.
I'm very bad. I need to confess, I'm very bad at doing that estimation, like when they are getting, when this is gonna happen. And I think that whatever the company says, it's still gonna take longer time than they expect. Like few years ago, I think they said actually they would even start selling in the second half of this year. That haven't happened. So there is a potential for this to take some time.
Interesting.
So that's another thing you need to think about. It actually can take a lot of time for them to start selling.
All right, interesting. Any other things that you'd like to share about the company before we wrap it up?
Yeah, just that if you look like if they would get acquired for the same amount as Given Imaging would be, that would be $100 share. If we look at Medtronic, that owns the product right now, if they right now have a $3 billion in annual net income, and they have a $123 billion market cap. So I do not see why there would be a problem for like Medtronic to step in and buy them out. Of course, as we talked about it earlier, the question is at what price. But I do not see that there would be a problem for them to get acquired.
Right.
Yeah. So definitely big potential here, but you cannot be safe that it will play out.
All right. Well, maybe in like 6 months or a year, we can have you back on and talk about it and give us an update.
Yeah. Another good thing about we already talked about the company going commercial. The company already have contracts with General Electric for the assembly, for the packaging, and for the shipping.
Okay.
So that's another kind of validation that there's something at least to find here. I also want to say, as I said before, there is risk. There is a need for funding. There is the stock is illiquid, but also there is some warrants as well. So it's not just dilution. Like if we see the stock going up, we are gonna see these warrants getting executed.
Do you own any of the warrants?
No, I do not.
Okay. Are they traded?
No, they were connected to the stock offerings.
Okay.
Done earlier.
Got it.
Yeah. So they're actually I guess it's the current shareholders, some of the current shareholders that are able to exercise these. It's not in the near price range right now.
Right.
So it's not that big of a problem, but if the company would actually start to take off, it could hinder some of the upside.
Well, it might be a good problem to have, right? If the warrants are being executed, then they're probably doing okay.
Yeah.
All right, cool. Well, Igor, it was a pleasure having you on.
Thanks for having me.
And when that other company from Microcap Club, when you can discuss that, let me know, and I'll have you back on to discuss that as well.
I hope I will be able to do that.
All right, great. Well, Igor, thanks a lot, and have a good rest of your day, and happy holidays.
Thanks, you too. Merry Christmas.
Merry Christmas. Take care.
Thank you for listening to the Intelligent Investing Podcast with Eric Schleien. If you'd like to connect with Eric for questions, comments, feedback, ideas, or to inquire about being on the show, please contact Eric at intelligentinvesting@gmail.com. So, in the words of Charlie Munger, I have nothing to add.